Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He hasn't been on in a while, but he's been putting out amazing work for the last couple of years. Probably the best, if one of the top two or three, if not the best, macro charts, commodities charts over there, showing like undervalued gold and silver companies, oil, a lot of money supply growth. He's been tracking it. You see his charts literally all over financial social media. People don't always give him credit for the charts, but you can see his name down there at the bottom. His research is that good. He's been a hedge fund manager for many years at Crescat Capital. He just left and he's working on his own fund now called Azuria Capital. Tavi Costa, thank you for joining me again.
Thanks for having me. Looking forward to this, Jason.
So, Tavi, we're recording this interview on Wednesday, January 28th, 2026. The US dollar gold price, Jerome Powell did not cut interest rates on the short end today. And surprisingly, the gold and silver prices, they still went up. So the gold price gapped up to over $5,400. The chart just looks, the couple hour chart just looks absolutely nuts. The silver price is still well above $100 at $116 an ounce. I hadn't even looked at platinum and palladium in a while in months, and platinum and palladium are up enormously too. I want to get your thoughts on the macro situation before we get into metals. The narrative from the people in the Trump administration, Federal Reserve Bank DC, inflation's not a problem. Inflation's coming down. There's low oil, low gasoline prices. What are your thoughts on inflation given what we're seeing with the stock market and the metals prices?
Well, I don't think inflation is really as suppressed as the government is saying and claiming that it is. I also think that as a macro investor, you're always trying to assess all the probabilities that could be unfolding here. And I would say that although it may sound crazy what I'm going to say, but when you have the weakening of the US dollar, you have precious metals moving the way they are, oil is clearly, in my view, resurging now, copper doing what it's been doing. Then Trump administration, or Trump specifically, on an interview yesterday or 2 days ago, actually, talked about how he does not want to hurt the investors in the housing market and so forth. I mean, he's one of them, I guess, and wants to keep prices higher. That the solution is not collapsing the housing market. So clearly he's got a view there. And then on top of it, you have, a Federal Reserve that will be forced eventually here to cut rates substantially. We're not going to see any changes in the fiscal side. Fiscal will continue to run hot. And so it's hard to say that we're, that inflation is contained. I don't think that's the case. And I would go a little further than that. The types of movements we're seeing, I mean, in the last 2 days, gold alone has moved about 8%, right? When was the last time that happened? That was 2020, in the middle of the pandemic. If you take that away from the equation, is probably the first time I'm seeing here in the chart right now. We haven't seen any time in history, maybe since all the way back to the 70s, in a 2-day move like that on a percentage basis. I'm not even talking about from a dollar base, because the dollar base is ridiculous. Now, you have to ask yourself, I mean, if we're seeing these types of moves and you compare with times like Germany in 1920s and other periods and other economies that suffered from hyperinflation, I don't think it's out of the realm of possibilities here. I don't like to be the doom and gloom and say these things, but I don't think it's a 0% probability. I think it's more like 20, 25 or so. And that's quite high. So I'm a little concerned about what's been happening. It feels great being right about metals, but feels like I'm missing something here. And if I'm missing something, definitely as part of your podcast name, Main Street is probably definitely missing something as well. So I don't know. It feels like we're just, staying afloat with the real inflation in the system. Monetary debasement is happening, like never before. It just really feels as well that we are in a monetary realignment occurring. I do think that, I remember just not too long ago, I was talking about with a few famous investors about potentially, weakening the US dollar. And these people said I was crazy. And now this became a narrative all of a sudden. Did I think it was going to become a narrative so quickly? No. but it's how do you fix a trade balance issue, not just fiscal balance issue, a trade balance issue with a strong dollar? You don't. You have to weaken the dollar. So it is a little problematic what we're seeing. You add the weaker dollar to a world where you have to suppress rates and you have to allow inflation to run hotter than expected. I don't know. It just seems like things are a bit wild on the inflation front in the US. And I don't know if the Main Street, again, using the name here, is really aware of the magnitude of these moves and the meaning of them for financial markets over time. And I don't think they're positive. They're very negative in my view.
Well, most Americans don't own any physical gold or silver. They own stocks in their retirement account. They own homes, like you said. So that's why President Trump is focused on that. Now, the politicians are talking about affordability, but they're not talking that the majority of the affordability problems, the stagflation, the shrinkflation, the tariffs, they're caused by Washington, D.C. They're not caused by free markets and capitalism. They're caused by bad policies. So the government, what the budget deficits, it doesn't seem to matter, Tavi, which political party's in power in the White House or in Congress. President Trump and the Pentagon, I think over the next 12 months, they're talking about upping the Pentagon budget, and it's already headed higher. They're talking about 1.5 trillion a year. I think we're already up to around a trillion a year are the estimates for the Pentagon budget. They're talking about up to 1.5 trillion a year. The budget deficits are blowing out. These are not low inflation policies, even if Trump and the Trump administration people on business TV keep saying that there's going to be low oil and low gasoline prices. I mean, that seems like a misdirection, because on one hand, you have they're focused on low oil and low gasoline prices, and then on the other hand, they're just doing whatever they want with the money supply growth. And it's not just the U.S., Tavi. I don't know if you've taken a look at the global M2. Another hedge fund manager friend of mine a couple of months ago told me to look at global M2. I hadn't checked it in a long time. And it's growing like enormously. It's almost up to $100 trillion. And the majority of the money supply growth isn't even from the US yet.
Yeah, I mean it's mostly China actually, right?
Yeah.
China has been increasing money supply like crazy. Look, I don't know. It just seems, I mean, there's a lot of ideas to me, to be doing. I have some fresh capital here to deploy, and I've been outside of mining and some other things that I'm usually involved, it's difficult to find great opportunities out there because everything is up. So
Yeah, it's not cheap and hated. Yeah, like it was like I remember during the pandemic, you brought up the pandemic. I remember when Cameco was between the uranium companies were a dollar. Most of them were a dollar or less. Cameco was between $8 and $15 a share for years. No one wanted it. Like those types of bargains are just few and far between right now.
yeah, and I would say that the opportunity in some of those bargains, if you will, and I wouldn't play this from you know, like owning shares. I would own call options on these things because you never know the future. You know me probably well in terms of the views that I've had over the years, and I used to be very bearish on China. Now, I own some call options on Chinese equities right now. I think it's one of the few places in the world that have not really benefited much from the capital, rotation we're seeing in most emerging markets. And yeah, I own a little bit of that, but I'm very focused on big long-term trends that I think are unfolding right in front of us. I mean, there's a question about mining, right? Is mining at a peak or is things frothy or not? Look, I think most institutions were caught off guard in the last 2 years. You don't fix a bubble, or I should say a depressed market with 2 years of good performance. I don't think that this is anywhere close to a peak. I think it's more of a wake-up call. And now institutions that were caught off guard had to show their clients that they had a position in this. But if you really analyze what these guys are doing and you talk to these guys, because I've been targeted as well, just like other managers that are in the space. There are not many, right? We kind of all know each other, particularly the ones that do a good job. And I would say that by being on that side of the of this market, the questions and the way that people have been engaging with us from an institutional standpoint, it's a bit scary. They're making big decisions without a lot of knowledge, and so I think there's going to be a lot of misallocation, all this commentary about rare earth and other minerals that have never been thought about and now have been talked about like there are great opportunities. I mean, they're not really great opportunities. They're kind of, low return sort of projects that you're not really going to make a lot of money here. And they're very small markets. They're probably going to get oversupply. But when you look at bigger markets like gold, silver, copper, and others, I think that the knowledge and the decision making that is happening across those markets is not as not as sharp. And I don't know. It's a bit of worry how this is going to play out as well from that standpoint. We're not seeing any discoveries. We're not seeing any companies really increasing production anytime soon here. So from a nominal standpoint, things may look very peaky and toppy and so forth, but there's not really a fundamental reason for why these metal prices should be coming down. They're just catching up with, a long history here of monetary dilution, debt creation, and mismanagement from most politicians. And so, yeah, I don't know. It does. Well, from one side, it seems extreme. From the other side, from a relative basis, and you just mentioned money supply growth as well globally. We're just catching up to where things have been, and so I'm very bullish still in the space. I mean, I don't think we've seen the cycle yet. I mean, we're in the middle. We're not in the middle. We're still in the beginning, in my view, and sort of wake me up when we have major amounts of M&A and capex at its peak level, production increasing, discoveries everywhere. And we're nowhere close to that, in my view.
Yeah, I agree. It'll take at least a couple more years for more production. So, like some of these brownfields expansion projects. So, if a producing miner wants to expand its mill, maybe wants to increase production incrementally, 10-20%, maybe at an existing mine, spend money on an exploration budget around the mine, they could do that. But to bring on a whole new mine for gold and silver, it's going to take at least, depending upon the country and the jurisdiction and the permitting process, could take at least 3 to 5 years in certain areas. Other countries, it may take longer than that. But that was a good point you made about rare earth mines. I mean, the profit margins, people are like, oh, there's rare earth shortage. You're right. They're going to fund way too many of these rare earth mines that are not rare. They cause enormous environmental damage to the air, soil, and water. The capital expenditure to build one of these mines could be $1 billion or more. They might not end up being profitable. And that's not where actually the value added for the rare earths are needed. It's all in the processing, making the magnets. I'd much rather, Tavi, go and buy a gold or silver mine that could be in production in a certain amount of years with way better profit margins than free cash flow, then go and buy a rare earth mine and try to restart it there with all the environmental problems and then having uranium or thorium radioactive byproduct.
Yeah, I mean it's scary. I mean a lot of, I also speak with a lot of institutions and they talk about rare earth and other minerals as if it's a major market where they're going to make a lot of money, and it's just not the case. Yeah, even the government itself. I mean, the government has been funding a few projects that probably will never become economic. Sure, if you're going to be putting subsidies on top of those things and saying these things are now economic, sure, then who am I to say that something is not worth the investment? But I think we're entering a world where, sure, if people are doing this with these small markets, they're going to eventually do this with the actual critical markets. And I just think that one exercise I've been doing a lot about, what would the peak of the cycle look like and things along those lines is we're still in the transition where people are like, even from a discounted free cash flow approach, we're far from a peak level. Now, I do think we're getting to a world where people are going to start paying what I call securing metal valuations. And if that's the case, none of us know really what people would be paying for these things. And that's where things can get wild here. And the other aspect is the margins we're seeing for most of these companies. You mentioned gold and silver, rightly so, especially silver. Um, some of these mining companies are still producing at sub $15 an ounce, some of them at $10 an ounce. Well, if you're selling silver at $100 or so, maybe 110, who knows, maybe 120, these are not your average margins we've seen in history. I mean, we're talking about some of the largest margins ever, ever, right? So yeah, I don't know.
I
In
think
our institute,
the margins are better than even what the 1929 one, where the oil
yeah,
price was falling in deflation, and the
no,
1970 stagflation, I think.
there is nothing like this. Nothing. I mean, we run a mine, a very large mine, and we're not seeing costs anywhere close to this. I mean, I think we're seeing cost increase of maybe 15%, which is high, but I mean, silver prices just triple. So I don't know. It just seems maybe the cost is coming here on the curve. I would not shock me, but and I think you need to be aware of that. I've said this before, and I do think that oil and energy overall is a great way to hedge. If you're not hedging your energy costs in your mining company, I think you're out of your mind. I think it's a very low cost hedge to put it on for the next 3 to 4, 5 years or so. But at the same time, I'm a bit concerned about, um, I don't think the market is appreciate. I think the market is basically priced in that most of these metals are not going to stay where at these where at these elevated prices that we're seeing. And I disagree. I think we will. I think we will see. Maybe we'll bounce back to $70 an ounce, but even at $70 an ounce would have been a dream price, a year ago for silver prices. And so, yeah, it just this seems a bit, a really good time to be a large investor in the mining space. I have to say. I mean, this is a core investment of my portfolio. And I'm really excited about it because I don't think we've seen anything yet from the mining standpoint.
And to add to your points there, I think the gold and silver industry, the mining industry, it's the only industry over the last 12 to 18 months with this high percentage in free cash flow. So I think that's what a lot of the generalist investors are finally starting to notice. Some of them had zero exposure, Tavi. So I was bringing up like ideas for valuations for some of these gold miners, silver miners years ago, royalty and streaming companies 2, 3, 4 years ago. A hedge fund manager looked at me like I had three heads. So I would be on a conversation. I'd be like, telling him the cash flow multiples, how cheap they were. It'd be like, if the gold price goes to 3,000, I mean, this company's worth way more money. Oh, the gold price is not going to 3,000. No, I don't want any gold exposure. So I think like the whole industry now is scrambling to reallocate the generalist fund managers. So pension funds, generalist fund managers that have billions of dollars of assets under management, they're scrambling now to get any type of allocation to gold and silver because they had almost zero for many, many years.
Yeah, some institutions have been buying some metals, but is it enough relative to the rest of? I mean, I think that wealth has gone up so much that a 30, 40 trillion dollar gold market is sort of peanuts relative to the size of wealth all over the world. Last time I checked, wealth was about $650 trillion. So it's not really that meaningful what we've seen so far with gold. So I would argue that there's room here. There's legs to this move in a big way. And if so, how mispriced are the miners? Let's just say this stays at 5 years for 5 years, these prices. I mean, man, these things could see a major re-rating here, like major.
They're
We're
like
not talking.
Benjamin Graham, Warren Buffett free cash flow machines for this window, as long as we don't get a huge spike in, say, a government royalty tax or energy prices or something.
Yes, it would have. By the way, it would have shocked me. I know Berkshire had a few instances where they either bought it on purpose, not on purpose, or whatever. But it would have shocked me at all if these guys get involved. I mean, if they got involved in the energy, I don't know. It just seems like, yeah, the opportunity is so clear. And look, I think this is one of the best, most compelling. I mean, we used to talk about these things as incredibly compelling and love the idea of investing in mining, but metal prices are depressed at that time. And now we've seen metal prices validate the thesis, but miners themselves have just not validated it. I mean, they're still depressed. They're still I would argue maybe that earnings in most of these companies have gone up way more than their share price. In other words, they got cheaper with this move. So,
If you use, yeah, fairly close to spot price discounted cash flow projections, yeah, I agree for evaluation because the GDX, I pulled it up right now, it's at $112. The all-time high previously was at like $64, $65 for 10 or 15 years. And then it had never gotten anywhere close to that. So finally it blasted through. But even though that's about double the previous all-time high, I mean, the earnings power of these businesses, as long as their profit margins, their free cash flow, these things could just keep reinvesting the free cash flow. There's a lot of good options now. You run a mining company, so there's a lot of good options now with the free cash flow to invest in exploration, to go buy another mining asset for growth. You could maybe do share buybacks if you think your stock is cheap, and you could even potentially issue some type of dividend too.
well, it wasn't too long ago when, I'm just looking at the chart of gold here. January or February 2024, we were at $2,000 an ounce. At that time, I was looking to acquire a mine, and it was being priced at a gold price of about 1,500. So you had a, $500 conservative margin to price the asset. And in the middle of all that, gold began to go up to 2,500. And they were like, well, let's readjust this to, let's just say that the price is now 1,800. So we readjusted to get to the more appropriate valuation. But I mean, it wasn't too long ago when we were talking about 2,000 being potentially expensive. And now we're 5,500 pretty much now. And I'm not sure we're done here. And I don't know. It just seems like gold prices could be cut in half, and these companies would still be very profitable. So I don't know. There's a lot of margin of safety here embedded in these valuations. Um, if you like earnings, what a time to be operating a mine. I mean, this is a wonderful time in my opinion. But yeah, very exciting. I don't think we've ever seen a period like this. It's we can try to go back and think about it, but this does seem very unique what we're seeing right now.
I think the rules changed a lot going forward after the 2008 financial crisis. And now we've gotten to the point, Tavi, whether it's Japan, European Union, China, the US, a lot of these countries, the worst asset class, the one that scares me the most, is actually government bonds. Because it just looks with the money supply growth that the governments, they don't want to cut spending. They have these crazy programs for green energy. Some of these European Union still talking about it. Some of these others with wasteful policies, overregulation. They're wasting a ton of the tax receipts, not on the economy and creating jobs or anything like that, but it's on just wasteful stuff. And so they're just going to monetize government debt. They're going to create new currency and buy government debt and keep funding the government and maintaining the status quo. And that's going to be highly inflationary and bad for the real economy. And I think that's why the metals prices, the gold price, what in every other currency prior to the US dollar was already going parabolic for 12 to 18 months. The gold price in Japanese yen is even crazier than the US dollar gold price.
I mean, it just seems like we're an emerging market in the US. It's just weird. Um, I mean, I grew up in an emerging market and I've seen currencies collapse and have issues with inflation. It's not very different. This is, very similar to what I lived through in the 90s and early 2000s in Brazil. So, uh, look, I don't know. I think there's going to be, uh, it, I think investors have a very difficult task ahead of them where most of us have a lot of discipline that look at from the lenses of how much credit we have in the system, how much money supply I have in this. We're going to be looking at these valuations and we're going to be our own enemies in terms of the letting these things play out because the world is so unleashed right now that um, we just got to buy these things and not be looking at them because it's going to be volatile. But I don't think he ends here. I think he ends a lot higher. And yeah, that's the way I'm approaching this. I mean, I've always focused on buying good management, good quality assets. That's where my energy goes. And then, the other part of my energy is just being patient, right? It's just like letting this play out because it's just so messy, the world right now. And we could wake up tomorrow and gold could be down 4%. And then the next day it's up another 6. That's how messy things are. And I don't know, I want to participate in that part of the world. I just want to acquire high quality assets and hold it for the next 5 to 10 years. I think that's the way to really, create wealth here because it's things are going to get wild.
Now, you mentioned Brazil. I want to ask you about investing in mining companies in some of these Latin American countries and emerging markets. Do you think with the prices rising, we already saw this in Africa with Ghana, the government wants to renegotiate the royalty tax. Barrick Gold had a mine confiscated in Mali. Mexico has permitting issues with open pit mining. Are we going to see a lot more of this, or are the countries, the politicians running these governments going to be realistic? Because if you're in Argentina and you have a massive silver mine, La Navidad, or the one in Escobal in Guatemala for Pan American Silver, those are worth billions of dollars in net present value of discounted cash flow, Tavi. Do you think that these governments are going to be realistic and say we need to fast track this mine? It's worth billions of dollars of investment and jobs and tax receipts at the current silver prices. We want to fast track these things so we can start making money and improve our economy. Are these Latin American countries going to have this type of attitude, or do you think things are headed in the wrong direction?
No, honestly, if you go back to the 1970s, what you're going to find is the usual aspect is that prices go up and then you get to kind of the middle side of the cycle, you begin to see nationalization of mines and governments trying to really make sure that they secure metals through nationalizing operations. And what's now let's talk about what's different this time, where South America right now, basically most politicians that are on the left that have the ability meaning the potential, thinking behind and the rationale behind trying to acquire these things and nationalize them. I shouldn't say acquire because it's not the word, it's just taking over the operations. Um, I believe that they have a gun in their head right now. I think that the whole Venezuela situation has shown that countries like Brazil with Lula or Colombia and others that still have some left leadership are very limited on what they can do in terms of screwing things up. So we have this sort of inherent floor of security in the market that is not appreciated by the market yet in the South American, Latin America regions. And I don't know, Africa is a whole different ball game that we could see nationalizations and other things. It's not a place I have an edge on. I don't want to sound like I do, but I don't think South America is wrong, going the wrong way, or Latin America. I think we're going to see a period of, this is a very prolific part of the world in terms of, um, you know, unexplored and incredible opportunities. And I believe that this is going to be, we're going to see a lot of these things come to fruition in the next 5 to 10 years in Latin America, given the environment and the link with the United States, which needs and requires so much critical metals. And their only path to do that is to provide security to Latin America, all and enable them to, you know, to really operate mines and other natural resource projects that have been, to your point, in some cases neglected or not able to be developed for other political reasons. And I think that's just getting started. I think we're going to see a lot more. There's so many cases of make this country great again in Latin America, right? Like new presidents that came in, they're looking to completely revamp the country. Bolivia is a great example. Argentina is a great example. El Salvador is a great example. Chile is a great example. Then you have potentially Brazil being an example. Colombia has elections coming up here soon. You could see it. You saw Paraguay is already an example. So everything is turning right, and I shouldn't say right. I should say more business oriented politicians because people have been framing them as right, but they're just capitalists. I mean, I met with the government in Bolivia, and I didn't think they were right wing at all. I thought they were very business oriented. They're trying to, apply changes in the country that have not occurred over maybe ever. And these are very changes that make sense from an economic standpoint. And
Yeah, and
I
Bolivia
think,
might have more silver than anyone, right? I think they have a mountain, a giant mountain with over 1 billion ounces mined of silver. It's called Silver Mountain, but it's hardly been explored. So because they haven't had really good private property rights for foreign mining companies to make investments there. But at the current metals prices, I mean, they need to come up with some type of balance policy where maybe there's a higher royalty tax, a mining company for government royalty tax, and then the mining company has to make it investments into infrastructure, schools, clean water, electricity, those types of things to improve in exchange for getting to invest in the mine. But if the capital is invested into the mine, that's beneficial for everyone. That creates jobs, that raises the education level. There's higher paying jobs besides just the mining job in the mining town around the mine. So there's all these beneficial things, and then the government gets the tax receipts. I think like the people that have been anti-mining and anti-capitalism, they're just not thinking that like if the investments are made into the country, there's a middle ground there that can benefit everyone.
yeah, I look, Bolivia is a place where in the 1500s, when the Spaniards came to the region, they basically found Potosi, which was a mountain of silver. And that mountain of silver basically financed their operations during that time. I mean, it was responsible for most of the silver in the world. That region became the most populated region in Americas, including everywhere pretty much. And Bolivia was a very relevant part of the world at that time as well. And has lost a lot of relevance for most of the reasons you just mentioned. But it's still a very unexplored region of the world and has a lot of resources, not just minerals in terms of metals, but also energy and other things. And yeah, it's a country that the slogan is not "Let's make Bolivia great again." It certainly is "Let's make Bolivia great for the first time." I was very impressed with the people I met in the government. I was impressed because not very often you see the commitment to change things so drastically. And when you realize that, and it's the main reason why we have seen lack of foreign capital coming into this country for so long, it's going to be one of those monumental changes in an economy. And I think it's bigger than a lot of other economies we've seen. I mean, all eyes on Venezuela, and maybe rightly so, but I think Bolivia is that giant that is just under the radar, gaining more and more attention and gaining more and more momentum, and would be, in my view, one of the most, some of the best places to invest in the next 5 to 10 years, just given the period of depression that they have been to. So, small changes can go long ways when you are in a position like Bolivia is right now, i.e., look at Argentina, right? Just a few little changes, and we saw quite significant success with Milei in Argentina, and I think we're going to see the same with Bolivia, if not on steroids.
Yeah, and Argentina's had some enormous copper and gold discoveries, a little bit of silver byproduct, but mostly copper and gold, right, with Vizcaya and some of the others. Now, some of these Latin American countries, how do you think they're responding to what the US versus China with this technology arms race, kind of this Cold War 2.0 over artificial intelligence, data centers, robots, like 5 or 6 key technologies, and US and China are trying to secure energy, cheap energy and metals. Do you think if you're a country like Brazil, are they trying to make sure that they don't upset either China or the US, that they can make trade deals with both countries, or do you think that they're going to have to pick a side?
No, that's a good question. I've used to be more of the camp that we would see Brazil specifically, just because I'm from there, being sort of the Switzerland of Europe in terms of doing businesses with everybody and being very neutral from a geopolitical standpoint. But I think we're definitely starting to see the influence of the US in the country, forcing the country to agree with commitments with US related firms. We're seeing, and the reason for it is because it's very clear the path that most of, the US economy will need in terms of the demand capacity of minerals in the future, given what's happening with AI and onshoring. And a lot of these countries, including Brazil, have a surplus of energy creation and so or generation. And so that, that will be tapped by most of these US companies. And we're seeing the Mag 7 companies and others engage with projects in those areas for utility companies and other things. And I would expect a lot more of that in the future. So yeah, I used to be of the view that this would be a very divided world in terms of how Brazil would, approach the situation with China and US relations, but I'm starting to think that they're leaning on the US side more. And I know it's maybe a contrarian view. A lot of people like to say Brazil is leaning towards China and so forth, but it's not really what I'm seeing from a business standpoint. And I think Lula is definitely showing his cards recently here that is looking to really try to engage with Trump and the Trump administration as much as possible more recently. So there's some significant changes here. So does it really matter? People used to say that, why would you invest in Brazil when Lula is the president, and does it really matter? Again, I don't think so. I don't think he has much of a relevance as he used to have in the past, given the situation. And he's very much aware of what happened in Venezuela. He's not stupid. Lula is anything but stupid. And I'm not a supporter. I hate the guy. So I
Well,
just I
wasn't he
just think
involved in that Petrobras scandal where there was like over $100 billion that was stolen or misappropriated, embezzlement, stuff like that?
yeah, of course. I mean it's or I shouldn't say of course because I'm not on the legal aspect of that, but the scandal was broad enough that was certainly related to government and officials and others. But I just think that people have this idea that these politicians are stupid, and they are not. I mean, these guys are very clever, and they will change their tune if they think that they're constrained from a political standpoint. And I think Lula's in that situation right now.
Oh yeah, I
So
agree. They're not stupid. They're a lot of them are just corrupt. And so they'll say one thing on TV or on the news, but their actions and their behaviors behind closed doors will be the opposite. So to add to your points there about the US, I think there's a Brazilian company, I can't remember, it's a junior company. They have a deposit that has potentially heavy rare earths with the dysprosium and the terbium similar to Chinese rare earth deposits, but they just negotiated a deal with my alma mater, University of Virginia Tech, which has a really good chemistry department, and they're working on rare earth processing up the value chain. So they will be providing the mine supply, and then they're going to be working on a pilot plant at my University of Virginia Tech for rare earth value added products and then making magnets. So that's kind of like a potential US partnership deal there, and maybe they'll get like some funding from the Pentagon or Department of Defense, some type of additional grant money.
yeah, I mean, Brazil has got some of the best. I mean, if you like rare earth, I think that's probably the best rare earth, one of the best rare earth potentials in the world that is actually economical. Lithium as well. Those are two of the most hyped minerals out there that actually, they do have potentially good deposits that can be economic. So, but it's very rare to find these things. And so, rare earth is rare. Good rare earth deposits are rare. Let me put it that way. They're very rare. I got now crappy deposits are not rare. There's plenty out there. So,
And
but
they're
the good ones,
expensive, and then tons of your chemical costs, and you have all this
yeah.
radioactive byproduct with uranium or thorium. The thorium, there's no revenue source for it. You have to store it, so that's just a sinkhole there of funds, wasted funds.
Yeah. I mean, so hmm. Yeah. I just think most of these Latin American countries are sitting in a very strategic position right now and just looking at the evolvement of artificial intelligence, improving the labor markets in those areas, and also looking at, the inflows of capital out of US based assets into those areas. These places can be true benefiters of this macro landscape that we're seeing. And weakening of the dollar plus suppressing of rates is some of probably the best mix you can ask for to invest in emerging markets. And so you
Well,
can
they
say
also
that,
have the best deposits, right? So, like Latin America, Africa, they have some of the best geology because, other than a few new discoveries in Nevada and some low cost mines in Canada, the majority of the discoveries for new copper and gold mines, most of them are going to be in Latin America or Africa.
yeah, and Africa political environment is a question mark. Can you get around that? In some companies, some countries, perhaps some companies are able to navigate that well, historically speaking. But if you're seeing this involvement from South America well, I'm sorry, from the US and South America, I mean it it reduces a massive amount of risk you used to be, to have to be worried for. Like when we invested in Bolivia for the first time, we knew that, this is, mind you, this is the largest exporter of the country and fourth largest silver mine in the world now. And our concern was that this could get nationalized, and our risk was basically a year because that's how much this was being sold for, a one-time free cash flow. And now that risk has been taken away, in my view. Like, will the new government really try to nationalize the mine and screw up everything they're working on? I don't think so. So we're now going to see a country that went from a country discount risk to maybe a premium relative to other areas like Colombia, for instance, or maybe Brazil. So yeah, what's an asset worth in that situation? It's crazy. It could be very, very interesting.
So you're saying that Bolivia then is in the past it was uninvestable, or maybe you, because you're a hedge fund manager, you were able to go boots on the ground, bring in people there and comfortable with some of the risk, but the average person probably would not, or generalist fund manager would not put any capital into Bolivia. You're saying that those things are changing rapidly now, that there are going to be more investment opportunities in countries like Bolivia. If the U.S. military is down there in Venezuela, maybe even Venezuela will be investable in the future.
Yeah, look, when I was raising money for that endeavor, it was very difficult to raise money. Either the person got it or they just hated the idea. Um, and it might have been one of the best transactions in history of the mining space because of the situation. You're buying something with silver prices at $15 an ounce, with a country that is completely depressed. Nobody wants to touch it. And then you have a silver market that changes, you triple your resource, you find a new discovery, and then on top of it, you have a political shift. So
It's a lot of tailwinds.
call
Yeah. You have
call
good
call
timing.
ourselves lucky, that's fine. But I'm just saying, I guess, I'm not concerned about what I used to be concerned. But do prices truly reflect that in the country yet? No, I don't think so. I think there's plenty of opportunities. And this is not an economy that has a stock market, or right, like they have a bond market, but its financial infrastructure isn't non-existent basically. So they're going to have to build up the country, right? I mean, if they want to attract capital from outside, this is going to require a lot of infrastructure, and they're looking at those situations. I think the administration is very capable of understanding those constraints in order to grow. And I think there's lots of opportunities in those areas.
Yeah, I agree. And eventually, if Venezuela stabilizes in the years ahead, there will be opportunities there. I think there's a lot of mining 10, 15 years from now, Tavi. We might be talking that Venezuela has better mining than they do oil and natural gas because it's very underexplored there with the potential for copper and gold. They have similar geology what to Brazil and some of the other Latin American countries.
I'm not going to name the person, but I spoke with a very high profile CEO about Venezuela, and that used to operate in the country very actively, and told me that the issue obviously was never, ever, ever opportunity in the country. There are so many mineral opportunities there, and they wish they could perform the way they were performing before and expand their business there. But the writing was on the wall that the situation politically was shifting. So they exited the country at the right time. But um, yeah, I mean, I do think Venezuela is a little more tricky than Bolivia. And I'll tell you why. It just truly feels like what's happening in Bolivia needed, and it's very similar to Argentina, and it needed no intervention, right, from the beginning. Maybe now you've seen some intervention between U.S. and Malay, but from the very beginning, Bolivia saw no intervention. This came from the population that was tired, fatigued, and wanting a change. And when you have that kind of level of shift, it's very powerful, right? Because it keeps the government on check. And so, and it basically removes the opposition from, you know, or the opposition needs to revamp itself and become less, ultra socialist, which is really interesting, right? That's probably what's going to be the case. Don't think that the left is going to go away. It's not going to go away. It's just going to be revamped to something else. And so we've changed a lot over the years there, and I think those changes are structural, not cyclical.
And they need to focus on what jobs, economic growth, improving the economy so people have a higher standard of living. Uh, you're starting to see that. You've seen that first with Argentina over the last 3 or 4 years. I think the other Latin American countries are seeing the investment that has come into Argentina. They're seeing that the economy is steadily improving. So overall, I think a lot of these other countries like Bolivia and some of the other ones you said, they're going to see that they're going to want the investment dollars from mining companies, oil and natural gas. I wanted to ask you as we wrap up here about as a contrarian, because I know for years you were putting out the best like macro charts on
No, thank
how
you.
undervalued the gold miners were, the silver miners were, the free cash flow. I mean, some of them at one point a couple of years ago, Tavi, there were one times free cash flow. You mentioned that there was a lot of them at one times cash flow. You're able to buy like assets for pennies on the dollar, cheap valuations. Things are a little different now. Where are you looking now in terms of good risk versus reward, good contrarian value investments for discounted free cash flow right now?
Energy is definitely a place. I love energy right now. Working on lots of things on the energy front. I think there's going to be a lot of opportunities in the future. This is similar to what you're referring to, where you don't know if you're early or not, but I don't care. It's just really the timing where smart money begins to accumulate and and create value over time. So yes, I've been expanding my network, expanding my capital deployment in this area, and also starting to really dive into this whole sector of the economy where people think oil is going to go away, people think natural gas is a thing of the past, and I disagree. I think that particularly oil, because gas, some people have been linking as obviously the sort of the only way forward here for the next 5 to 7 years in the US to capture some energy, but for data centers and other things. But I would say that the oil space looks really, really attractive to me. So I think that people are overly discounting and being overly bearish, and that's reflected on the price. And I also think that Trump has full control over the oil prices, and I just don't believe that that's the case. And this is not something against Trump. I just don't think anybody has control over commodity prices, particularly in a world that is so, that unraveling the way that has been. So yeah, I would, it's one place where fresh capital, at least on my side, it's been deployed. It's an energy. So I'm very focused there right now.
Yeah, to add your points there for free cash flow yield, which is one of the valuation metrics that a lot of value investors use now, the oil and natural gas companies in the US and Canada, there's pretty much a lot of them across the board. Free cash flow yield between 9 and 15%. There's a lot. So,
Yeah, yeah. I mean,
so
yeah.
that's attractive risk versus reward there for discounted free cash flow companies.
Yeah, and if you start pricing a world where maybe oil prices go back to 80, maybe 100, then you're talking some stupid free cash flow levels. And so it's interesting. I'm also very focused on these make something great again in South America. Like I think there's plenty. plenty angles to work on deals, structuring deals like we did with San Cristobal in Bolivia, and that will look attractive here in the near future. So investing in Latin America, to me, those are structural changes, not cyclical. Same goes for mining, and energy is a little behind in that sense, but it's the moment to be entering and then seeing that come to fruition in a few years. But I could be wrong. It could happen next month, and I'm very wrong. And unfortunately, didn't deploy all the money I wanted. But I'm also patient. I'm just planning things ahead here and seeing. All right, well, did very well with mining. Do I think it's the end? Nope. I think this is a core portfolio for the next 5 to 10 years. But energy also looks attractive. Latin America looks attractive too. So that's a place I want to
Are
be.
you super bullish on copper prices? Because there's people out there that like, oh, gold and silver are gonna have a huge correction, and money's gonna rotate into copper. I think there's a lot of copper depending upon the price. So if the copper price, let's say the copper price is at $5 or $6 a pound, there's a certain amount of supply. If it goes up another dollar to a pound, there's even more supply available. Copper's situation where every dollar or two it goes up a pound, there's even way more supply that could come online.
It it's so hard to be bearish on a commodity and know it's so supply constrained. It's like we have very large amounts of copper in the world. We don't have enough copper above the ground. And I don't know, 15 years from now could be a very different story. Maybe we finally bring those metals up. But we're not in that world right now. And we know the demand is going crazy. My view about copper, maybe 1 or 2 years ago was that this whole idea that copper really represents cyclicality of the economy, and it is what people used to call it the Dr. Copper, the only metal with a PhD in economics. Um, again, for if you looked at from a probability standpoint, I think this is a time in history where the changing prices of copper least reflect the economy now because it's purely driven by what's been happening with the lack of discoveries, lack of supply, and the ongoing structural demand that we're seeing. So,
Yeah, it
yeah,
kind of divorced from being so cyclical
divorce is a
because
good
like you
word.
said, it separated, it changed because of all the capital expenditure being spent on the new technologies, what the data centers, the electric vehicles, all those electrification, all those types of new technologies are all super high metal and copper intensive.
Yeah, I think divorce is a good word. So,
Yeah,
I'll
so
go
like
with that.
the old view of copper, right, was that like the copper was extremely sensitive to the real economy, consumer spending, things like that. But if these large tech companies are going to basically they're going to spend the capital expenditure regardless of how the economy is because they want to keep improving all these different technologies with the data centers, the AI, robotics, all these different things, electric vehicles, driverless cars, all that stuff. Then that's not going to be the copper price is not going to be as sensitive to consumer spending as it was in the past.
Exactly. Yeah. No, yeah, the copper space, I'm very bullish. The copper space, I'm working on a few deals that I think could be very interesting on that. Love copper, and we'll be looking for exposure moving forward here. I mean, this is through miners, not just buying copper, but I think this is one of the best. This is not one of those hyped commodities that people like to talk about that has a small market. It's quite the opposite. This is a real market with lack of discoveries, lack of things that are going to come online, and good margins. Um, and I foresee myself being very involved with this in the future.
Well, the data center build out is just starting. So like the average person sees that like these tech companies are spending hundreds of billions of dollars on capital expenditure for the data centers, but the only like 10 or 20% of the data centers are already built. The majority of them are either under construction right now or they haven't even been built yet. So as this build out occurs, that's going to be way more demand for energy, natural gas, nuclear power, copper, strategic metals. I've seen that they're switching to graphene near some of the data center racks. So there's potential for a lot of these different types of metals going forward. as long as the tech companies keep spending the capital expenditure.
Yeah, and look, if I think from a pillar of capital standpoint, I mean, most of these AI companies, people are talking about these companies are hitting a wall of spending. I just have a different view on that. They are generating about $500 billion a year in free cash flow, not cash flow, free cash flow. And they have on top of it zero debt in their balance sheet when you look from an aggregate standpoint. And so if you think about how much capital can be rotating out of there, either because they're going to leverage up and maybe have 40, 50% of debt in their balance sheet over the next 5 to 10 years, or they're going to completely evaporate their free cash flow. And which again, $500 billion a year. Think about that. Just if just a portion of that comes into the mining space, which it is coming to the mining space, obviously. That's why we're seeing the move. This could be very dramatic, in terms of the change, and it could be very sustainable move as well in the mining space. And so, this
I
is
think
why I
I
don't.
think I saw a deal with Amazon. Didn't Amazon just announce a deal with Rio Tinto for guaranteed copper supply in Arizona? I think that was like a surprising deal from a tech company with a miner.
Yeah, I mean, all these deals actually started back with auto companies, if you recall, getting deals with these mining companies too, trying to secure metals for electrical vehicles and other things, mostly lithium and other copper and other things. And then now data centers are doing the same. And so, or I should say, hyperscalers and others are starting to do the same strategy. And so it is interesting. I don't think this is the end of it. There's more coming.
Oh yeah, I agree. Today, Meta just announced earnings, and they just announced a $135 billion capital expenditure plan. So, so I don't think this is ending anytime soon. Now, I do have worries that there's going to be wasted funds. There's going to be
Oh yeah.
misallocations of capital. Oracle took on a bunch of debt. OpenAI probably is not the leader anymore in the software, but the companies like your Metas, your Microsofts, your Googles, I mean, they have plenty of free cash flow. Like you said, Google's not going to go bankrupt anytime soon. It's the opposite. They're minting money with Google Search and YouTube and all these other businesses.
But if you invest in infrastructure, energy, and materials, you want them to overspend anyways. I mean, it's sort of, and I do think they're agree with you. I think you're going to overspend. It's not like they're going to be, oh yeah, let's just spend 20% of our free cash flow allocating to this. No, for them, it's a critical threat for their own business to make sure that they scale these things. Otherwise, they believe in their minds that they're going to be out of business. And so, you know, let them come then. Then if they're going to be spending what they're going to say, well, yeah, and it's not like believing in their words. Like I don't want to sound like that. Just look at the numbers. If you're making 500 billion a year, I mean, let's just say their revenues just grow over the years, right? And it will probably. And if that's the case, then they're going to be generating more cash flow. They're probably going to decide to spend even more on these things. And so I would not be short the idea that these guys are going to overspend here. That's very likely, and we need to be aware of that and you know try to benefit from that rotation of capital. The capital is rotating, and what's not rotating yet is the valuation, right? We're seeing valuations still frothy on one side and very unfrothy on the other side, and but their capital is fleeing at a very full speed to energy, materials, and infrastructure. You can call infrastructure utilities and all these other things. I mean, there's so many different buckets of that. And who is bridging that whole aspect are the financials, right? I mean, the financials are going to bridge the capital coming in from the data centers and the tech companies into those other pillars that will benefit. And ultimately, the US can only do so much, and then people start looking for resources. They eventually go to emerging markets, so it's all linked, right? It's all part of the same sort of thesis. So you just got to figure out what is just a pure narrative that doesn't have a lot of grounded supported data behind it, or what it is, what isn't. And what I think it is real is the spending. And it will unlikely stop here. It may stop for a quarter or two, and then it will come back again. So, I wouldn't be short that for the next 5 to 10 years.
And a lot of these companies are already starting to automate more, fire workers. Some of the banks were already automating the process. They announced that they're going to be firing some workers and automating more of the processes. So you're going to start to see that where the artificial intelligence software keeps improving, the data centers get built out. This is going to create a higher price floor and a higher base case demand usage, for energy and for the metals, the materials to build and maintain the data centers, for the software, and then all the other technologies with the second order effects, robots, electric vehicles, driverless cars, drones, all those types of additional technologies that are going to be coming online going forward.
Yeah, I mean, if you looked at a chart of China from the onshoring standpoint, forget about AI and all these things, and just look at electricity consumption over the last 20 years in China, because of becoming the manufacturing plant of the global economy, what would, what would be the same, behavior in the US if we see ourselves doing onshoring and other things? What would be the same if we see that in Europe and other places, in Japan and Canada? Clearly electricity consumption and demand has been very low relative to history, and that is unlikely to be the case in the future. And with consumption going higher, obviously requires more infrastructure. And so from that angle alone would be a huge aspect of construction and material capacity that would be needed to develop things. And so I don't know. That's just, I'm telling you, I don't think this is the end of it at all. I think this is the beginning, towards the beginning of a real mining cycle, and a lot of people got caught off guard and are trying to catch up. And good luck. It's a very complex industry, and very few people know what they're doing, and lots of money will be misallocated, and but the whole industry will benefit, in my view.
Well, this time, this mining cycle, Tavi, it's being driven by all the capital expenditure investment from the technology companies. So the governments and the technology, because it's being talked about the new technologies, for artificial intelligence, data centers, robots, for military or national defense. On top of that, for advancing technology, new potential industries. So it's tied to all the energy and the raw materials, the processing of the strategic metals, the mining of the metals, is all tied to the new technologies coming online too. So I think that's what's different from the past. I don't, maybe it was like this way with the internet a couple decades ago, but I can't remember this happening in my lifetime where the mining spending was so directly tied to all these new technologies. Because the past mining cycle was tied to China industrializing and China manufacturing. That was one of the major ones 25 years ago for 15 or 20 years. But now this mining cycle is going to be driven by all the investments into the new technologies that are going to be coming online, besides just the data centers and the AI software.
Yeah, I mean we're not even talking sovereign demand as well. That is likely to be the case here. As I said, securing metals is going to be a big, piece of the puzzle as well. And we're yet to hear central banks more traditionally. Maybe China is doing already. I'm sure it is, acquiring things like copper and silver. But I think we're yet to see traditional central banks also acquiring these things. They're going to figure out it's better to have that than financial assets so overvalued. So you might as well rotate into hard assets and have a portfolio of them. Makes sense. And so that can be a huge aspect as well when it comes to demand tailwinds for metals.
Well,
So
didn't the U.S. just announce in the last 12 months they want a strategic metal stockpile? I don't know how much money is allocated, but there's a
yeah.
list of strategic metals. Silver's on the list, I think.
Yeah, and I wonder if they're going to pile those up, or they're just going to uh, invest in companies that allow them to get a piece of the production. I think that's more likely, but
A mix. They're just throwing things at the wall because there's like a South Korean strategic metal and silver processing deal where a South Korean company is building facilities, I think, in Tennessee, and the U.S. military has led a 40% equity. So that's one of the deals. But then Congress is talking about a 2.5 billion package for metal stockpiling. Doesn't sound like very much. But then I think Trump was just at Davos, and they've been floating the idea. I don't know if they're going to actually uh, allocate all those funds. They're talking about 250 billion in grants for new nuclear power plants here in the United States. So I don't know if that number is going to stick, but they're at least talking about 250 billion for research and development, building the old style nuclear power plants that are big and bloated, the expensive ones, and the new smaller modular reactors.
yeah, yeah. Hmm.
I guess it's a perk of the world reserve currency, right? I guess like they can lie about the money supply and then they could just allocate all these funds and then the average person doesn't understand how much of the funds are being spent.
Well, how ironic is the fact that this is all happening right after a world where everybody thought that we're going to go to metaverse and buy NFTs instead of metals and all these other things, and now we're back to a world where everybody wants to buy something that is real and just makes so much sense. Now,
Well, the
sometimes, go ahead.
Sorry. Well, I was gonna say the metaverse failed initially and he cut it, but now like with the AI, augmented reality glasses are actually bringing it back now. So like Meta and Google are all having deals with the glasses manufacturers, and they're all gonna have like augmented reality glasses. So I don't know what the lithium-ion batteries or energy usage is, but it was 5 or 6 years ahead with the metaverse, and it was a failure. But now they're bringing a different variation back. But all these things are going to be using what a lot of metals and a lot of energy.
Yeah, 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 the world of investing in real assets is just getting started, in my view. And so we saw the boom in watches as well, and houses, and then that back to mining now and metals, and people think energy will never see that. I disagree. It's going to keep rotating into things. You got to keep looking for that dynamic of rotation that tends to occur in a bull market in commodities, where whoever's leading or whoever's lagging is likely to be the next leader. And I think you just got to be actively looking for these things over time.
Well, it paid off for gold investors and silver investors over the last 3 to 5 years because people who accumulated then, they were buying assets, what discounted cash flows for pennies on the dollar, and now it's finally starting to pay off. They're making enormous gains. So some people are panicking and selling maybe because they need cash. They're selling their silver or selling their gold right now. Probably not the best idea to go out and sell all your silver because we don't know that what prices the metals prices are going to end up going to. But I think there's a lot more growth ahead because I don't see governments doing, whether it's Japan, the U.S., European Union, China. I don't see them acting very responsibly. Especially in the G7, they seem to be acting like you said, like banana republic emerging markets with the way they handle their government finances and their bond market.
Yeah, I yeah, I mean we're getting to a very interesting world right now. I'm just enjoying the financial aspect of it and sad about society in general because I don't think people fully understand what's happening. But those that know the rules of the game will understand that you're just going to continue to get diluted and debased if you don't own real assets. And so, but for those that understand the game well, will also be an incredible time to be an investor in these industries. And so, yeah, I feel like I'm in a privileged place to be in a niche area of the market that not a lot of people are paying attention to, but now they're sort of coming to me, and it's an interesting seat to be in. But I'm sure it's going to be others, right? I think that plenty other opportunities in the markets in other places like Asia. That's a place I'm not really focused, but I'm sure there's going to be a lot of opportunities in that region. Africa, I'm sure there's going to be lots of things to do there. I'm just trying to pick and choose the areas that I think I truly can create value and have an edge on. Otherwise, it's just difficult to be involved. So, Um, yeah, exciting times ahead for those that are in that space and of commodities and real assets. I think it's going to be a good period ahead.
Yeah, I agree. I think there's going to be a lot of money spent now. Not all of it's going to be spent very wisely. At the Vancouver Resource Investment Conference that was in the last couple of days, I think one of the key points there was a lot of speeches on this, is that besides just the mining, there needs to be reshoring of the processing, the value added parts here for uranium enrichment, for oil, not oil refineries. Well, we have a lot of the oil refineries, and now the U.S. refiners are going to get with the cheaper Venezuelan heavy sour crude, but like the strategic metal processing. So you're starting to see stuff that was outsourced for decades now in the U.S., where the U.S. invented a lot of the rare earth innovations with the magnets and a lot of the stuff. U.S. invented it, decided it was environmentally unfriendly, outsourced it to China and other places, didn't want it. Well, now those businesses, the heavy value added manufacturing with a lot of chemistry and engineering, very difficult technical processes, those things are starting to come back and there's investment opportunities there.
Yeah. Yeah,
Well,
it would also mention for those that like high quality assets operationally, we have to think about a world one day and maybe 10, 15 years from now where you may have just instead of 3 to 4 to 500 people, operating in a mine, you may see a world where you only have 12 people operating a bunch of robots 24/7 with no politics. And what are those margins going to look like? That's that's another thing that comes to mind as well, right? Taking the operational risks today of high quality assets could pay off in the future. Um, Once operational efficiency will start leading the way in a significant form that could be largely mispriced in markets today. Of course, that will take a long time to happen, but you have to consider that if you're investing in a mining company for the next 10, 15 years, because I think it's a realistic world.
yeah, I think the robots are more likely to go into factories and mining, like you said, rather than the home usage. So I know like people are looking at like the videos online of the robots trying to cook and do stuff around the house. I think they're more likely to go into factories first, the humanoid robots, and then into mines first.
Hmm. I agree.
Well, I want to thank you so much for your time today, Tavi. Your fund hasn't, Azuria Capital hasn't launched yet. You said you're working through the regulatory stuff right now, so it's not officially launched yet. So if my listeners want updates on that and to follow your excellent macro charts, how do they do so?
Well, thank you very much for having me. I appreciate that. They can always find me on X at Tavi Costa or LinkedIn. I have my email address there as well, tavi@azuriacapital.com. But they can find it on Twitter or X, that address. Thanks for having me. I really appreciate and great catching up with you. Hope everything is going well.